Okay, test of control sales cycles for the sales cycles revenue. Well, as far as test of controls are concerned, revenue, sales ledger reconciliation, as you can see, verify credit notes with sales invoices, check prices, quantities, arithmetical accuracy, VAT, and postings, match good received notes with sales invoices, checking prices, quantities, arithmetical accuracy, VAT, and postings, agree samples of accounts in sales ledger, reperforming additions and balances carried down, review new customer files for references, credit checks, authorization by senior staff, ensure credit limit for customers are not exceeded by trying to post a sale which is beyond the customer's limit. Inspect correspondence on overdue accounts, ensure bad debts written off are authorized by managers, review process for dispatch of statements and ensure they are regularly set. Now, let us look at with respect of the revenue cycle or sales cycle. What we will do now from the we will look at the each aspect of the sales cycle. We will look at the control objectives and control procedures. Right? Remember that these control objectives and control procedures are the things which management has to place it. And I will tell you the technique that how to make a control objective and how to do a control procedure. So first of all, at the space of order taken, when management decides to design a control objective, what they will think that if we do not have this control, what bad thing or what worse can happen, right? For example, first thing that manager might be afraid that orders are not raised accurately. So they got the point, first control objective that orders should be raised accurately. So for that, what procedure will be in place? All orders should be confirmed with customers. Then uh, another thing came in mind, the bad thing that maybe customers are not credit worthy. So you get your control objective that customers should be credit worthy. Now, what you will do, all customers should be checked for credit. Another worst thing came in mind that credit limits should not, maybe credit limits of the customers exceeded. So, credit limits should not be exceeded. Another objective came in mind. And credit limits should be checked for customers. Another thing, company may not able to fulfill the order. So objective came in mind. Company should be able to fulfill the order. So inventory should be checked before issuing an order. There will be a control procedure. Then next level, good dispatch. Now here, management is afraid that the goods required may not be in inventory. So here is your objective. Goods required should be in inventory. What will be your procedure? Goods should be selected from inventory using customer order. The order should be then another worst thing came in mind. All orders. Another worst thing came in mind that orders may not be sent to customer. So here is the objective. All orders should be sent to the customer. Another worst thing came in mind that incorrect goods sent to the customers. So now the procedures. The order should be authorized and signed when goods selected. Order pads of computer-generated orders should be sequentially numbered to ensure none go missing. Match good dispatch note with customer order. Customers sign GDN and returns to company. Good delivery note recorded and filled with sequentially numbers. Now, at the time of raising of invoices, all invoice should be. Here is the worst thing came in mind that the invoice may not be raised for all deliveries. The invoice may be sent for incorrect amount, or the worst thing came in mind is that credit notes may not be valid and not be authorized. So, what will be the objectives? An invoice should be raised for all orders, deliveries, and the invoices should be for correct amount. Any credit notes should be valid and authorized. Now, what will be the procedures? GDN sent to invoice department to match and copy, attached to GDN and filled sequentially. Orders agree to GDN, GDN agree to invoice, invoice agree to price list. Above checked and authorized by authorized person, all credit notes allocated and copy attached to invoice to which it relates. All credit notes authorized by manager. Recording of sales. All sales may not be recorded. Correct amount may not be recorded for each sale. The sale may be recorded against incorrect customer. So your objectives came in mind that all sales should be recorded. Correct amount should be recorded for each sale. The sale should be recorded for the correct customers. Now, what will be the procedures? Review data ledger for credit balances where invoices may not have been recorded. Reconcile the data ledger. Check all entries to invoices. Send out statements to customers regularly. And then payment is received and recorded. Now, worst things came in mind. Customers may not pay the correct amount. All maybe some invoices get unpaid. Maybe receipts are not recorded, and maybe payment received not allocated to correct customers, and maybe all payments are not done properly. So what are the objectives? All customers should pay the correct amount. All invoices should be paid. All receipts should be recorded. The payments received should allocate it to the customer, correct customers, and all money banked properly. Now, what will be the procedures? Cash received, agreed to invoice, review, agent listing, and investigate old balances, chase up old outstanding balances, perform regular bank reconciliation, ensure that segregation of duties exists, review customer statements, lodge cash and check to bank regularly, and retention of customer remittance details. So far, so good. Now, the test of controls are the thing which has to be performed by the auditors. So what they will do to check this, to test this, they will review sales ledgers reconciliation. They will verify credit notes with sale invoices, checking prices, quantities, arithmetical accuracy, VAT, and postings. They will match GDNs and sales invoices, check prices, quantities, arithmetical accuracy, VAT, and posting. They will agree sample of accounts in sale ledgers, reperform additions and balances. They will review new customer files for references, credit checks, authorization by senior staff. They will inspect correspondence on overdue accounts. They will ensure patterns returns of are authorized by managers, and they will review process for dispatch of statement and ensure regularly sent. This will be the test of controls. So that's how you should design your control objectives, control procedures, and test of controls for sales cycle. I hope you understand it. See you in the next lesson.